Welcome. I'm pleased to join you in the midweek presentation of our 9-week course in stocks and stock market analysis. My name is Eddie Contreras. I'm from Bethesda, Maryland. Went to college in Maine, liberal arts college, where met some great people. Incredibly smart professors in economics and math, calculus 2, economics, sociology, Chaucer. Went on to graduate school in business, and now I trade part-time and make reasonable amount of money. This is a video showing the stocks and results from our watch list created Monday morning. So without further ado, I'm going to direct you to the screen. The upper left hand corner shows XX11, a peculiar stock. Ticker stands for 22nd Century Technologies. As you can see, I use the Merrill Edge platform, which provides some fundamental information about all those items in the stock market. All right, so I created a watch list on Monday based on information that came to me when I created a watch list, and I will teach you how to create a watch list in this first week, of course, and into second week. But I want to point out to you what the watch list did. Okay, the watch list notified me on Sunday, actually closer to like Saturday, of what they say is unusual volume. So this unusual volume occurred here during the day on Friday. During the day on Friday, over 2 million shares of that stock were traded. If you look to the right, you'll see that a normal day was well under a million, so that there was unusual volume. On Friday was clear. So that unusual volume led to the stock trading as high as $1.80, maybe higher. Looks like this red candle, or pivot as they call it, saw a reversal in buying. In other words, for every one buyer, there was a fraction more selling going on. So up to this point on Friday, we saw the stock go up to about $1.80 from well below 180, or what you would say in the previous week about $1 for an 80% gain. So that's important. If you were unlucky enough not to own the stock, you at least knew to keep an eye on it. You at least knew to keep an eye on it because it has drawn some attention. And what I want to point out is, well, there was unusual volume because there was almost 2 million sellers. And if you go toward the end of the day, well, you'll see over almost 2 million buyers, and then what amounts to almost twice as many sellers by midday, with more buying at or around this price point here. So what that means is people decided that 80% return on their money was good enough for them, and the price fell back to this $1.35 range. Okay, so at the end of the day, on Friday we were here. People like you and I studied the stock and said, Well, there were a lot of greedy investors that sold, but what investors tend to do is use half of their earnings to see if that stock is going to return to $1.80. So I put it on my watch list. Okay, I put it on my watch list. The stock opened at about $1.40. Whoops, a dollar. We'll say $1. Yeah, a little under $1.40. It opened at a little under $1.40 in the first hour of trading or so. It got back up to about $1.50. It's a little under 10% in a half an hour. So your day traders made some money. Okay, they're not silly. When the day traders found out about the stock, they bought, they saw the potential, they sold, made some money. Okay, the fact is by Monday morning we had seen what you call oversold positions, meaning like everybody was selling, trying to make as much money as they could. So it looked like at $1.30, people that had gotten in on 80 was still making over 50%. So it looks like that was the bottom of the barrel for that stock. So even if it was trading at 80 cents for the past month, it was still 50% higher or over at $1.20, and that's where it's going to stay. So by Monday morning it was an uptrend, and a huge candle here is what we'll call it, a huge candle wherein the price went up so quickly that you knew that was kind of a signal that this is going to be a really unique day, if not week. Let's go into Tuesday. Stock appears to have opened at the high of the previous day, and again, day traders made some money. Who doesn't want to make 10 to 20% of their investment in a half an hour? So even though this is a beginning lesson on stocks, we're learning about percentages and what most traders target as a good day. 10% of earnings in one day is better than what your savings account made in several years, right? Back in the day, savings account made 5 or 6% in a year. It's almost like investing your money for 2 years in today's terms, okay? So it was on our watch list on Monday morning because we decided to put it on our watch list. If we look at the end of the week, what is it? Stock is in an uptrend again. What does that mean? Let's look at 175 next week. 160 now, okay? From Monday morning at $1.35 to 160, you do the math. 25 cents. That's almost 20% in 1 week. Okay? Okay. Your day traders that invest, 2,000 to 3,000 a day or a week, we'll say 2,000 to 3,000 at any given time. Okay, making 20% on $2,000 in a week. What's that? $400 in a week. Okay. Simply by entering a position on Monday and holding it for a week, going to work, let's say they make $400 or $500 a week. Okay, the average, human being makes that probably at any given time in their life. Okay, but the person who was smart enough to invest doubled that. So what is that? The average wage earner, okay, basically made twice their money simply by learning on the how shall I say, nuances of trading. So obviously people that are more working class don't have knowledge, don't have the time or the money or the patience. So really what I'm saying is folks making 50,000 and above that study this because they have 401ks we'll say they bring home 700 or 800 a week, are now bringing home 1,200, making their their projected income well above 50,000 a year. And that's all you really need to do is get an education to increase your earnings, so when you become a manager, and make even more money, well, you've earned it. Okay, that's the end of this analysis. I'm going to go on to the next stock.